Okay, in today's video, I'm just going to recreate one of the setups that we were looking at in CAT. Now, if you look at the overall pattern, it is a bearish pattern of lower lows and lower highs, right? And price is clearly below the 200 simple moving average. It's underneath the 50, and actually I'm not worried about the shorter time frames at this point. But what I am interested in is how this most recent rally compares to some of these other rallies, because that's where the resistance may come in. And actually, we have seen it happen. So what I always do is take pretty much 100% of these prior rally swings and then project that from the recent low. Okay, we went slightly through that one. This one we're pretty much on top of, the resistance at 135.11. There's another swing over here that's similar at 23.45, low to high, projected from the low. So that gives you two symmetrical projections there. And then we also have a larger swing, low to high. I want to run a couple of the retracements, see what overlaps. And this gave us two areas to watch for possible resistance and failure. The first area came in with the combination of two symmetrical projections of prior rally swings, the ones that were around 23 bucks, and it also overlapped a 50% retracement, so that's 135.11 to 135.72. The second area where I'd look at for possible resistance is 141.30 to 142 even. Okay, so what can you do with this? Well, you can use this resistance for a swing trade if you want, or you can use it for a day trade. And today I'm just going to give you an example of, what you can do as far as a day trade decision. So if you trade into the resistance and you fail to clear it, you go down to a lower time frame chart to look for a trigger entry. So in this example, I'm just going to show you a 3-minute chart. So here is where you ran into the resistance, and then your first signal on this 3-minute chart is where you have the 834 EMA crossover to the downside, and also in the process you have taken out a prior swing low, which is a shift, from the bullish pattern of higher highs and higher lows to bearish pattern of lower lows and lower highs. So that's pretty much what you do. You wait for the trigger that tells you that it's worth placing a bet, and then you place your stop either above the high made prior to your sell trigger in this case, or above the high end of the zone, which I believe is 135.72. And you can also use option strategies with it. Some people will sell credit spreads, some people will buy a put, and so on. But that's what you can do with this work. It's setup plus trigger equals trade entry, and then you manage it and take it from one decision to the next. Hope that helps.